Good afternoon, everybody. Today, of course, is Thursday, June 29th, 2017. Of course, we have only one more day left, uh, and half of 2017 is over. So it'll be interesting to see how some of these stocks end up closing by tomorrow. And we'll go over a couple of the monthly charts. We're going to start with the monthly charts as usual. Okay, here we go. Here's the S&P 500. All right, I pulled this off as of yesterday. So, yesterday we were sitting at 2419, upper band 2367. So again, we're still above the upper band, still showing a lot of strength. Same with the Dow, 20,536, upper band 21,310. So about 600 points above the upper band. The composite, 5837, 6147. So again, all three major markets above their upper band on their monthly time frame. All right, here's crude oil, the actual commodity. Okay. Again, as we know, we bounced off the mid-band on the monthly chart. If this thing continues down, the high of this bar, which is 34.69, I think should be support on the pullback. As of yesterday, we were at 44. We're still $10 above it. Apple, upper band 136.22. We closed yesterday at 143.73. So again, above the upper band. Now here's a chart I hadn't shown in a while. This is actually the copper. Okay. I wanted to show this because I thought it was kind of interesting. You can see, we held support at the mid-band, okay? Copper made the move up. Then we basically had a sideways correction. The high of last month's bar is 269. And you can see as of yesterday, it closed out at 265. So this is very interesting to me because if copper does close above 269, I think you're going to see this continue to move up. Implication being, of course, you'd want to take a look at FCX. And then here's the GDX, right? This is kind of an interesting formation on a monthly chart, okay? It's kind of gone into a wedge formation. And again, typically what happens here is, we're either going to have a breakout or a breakdown. So this is something we want to be mindful of. And then if we look at gold, this is the actual spot price. This has been kind of interesting because, as you can see, the actual commodity itself has been in a really sideways, consolidation phase for a couple of years. All right. As we know, we made the elaborate move up, peaked out at just under 2,000, pulled back within the bands, upper band, and now it's been correcting sideways. So one of two things is going to happen here. We're either going to break out above or break out below. Either scenario, I think, projects to be a fairly large move. Okay. The one thing I do want to point out here, the high of last month's bar, actually the close of last month's bar was 1275.40. Okay. If gold does close lower this month, then it forms a bearish engulfment, which would tell me that we'd probably run down to the lower end of this channel. Okay, now we go to the short-term price levels. Here's the 60-minute view of the S&P 500, okay? 2421.88, of course, is the downside confirming line down, which would drop the market lower. And interestingly enough, the other day, we actually did close underneath it. And then, of course, we had the snapback yesterday, and we got back above 2437.5. And you can see, by the way, the market stalled right at the upside confirming line, which was 2453.12. All right, and that's where this pullback has happened, or really occurred from. Here it is on a 30-minute chart. Now, again, 30-minute has moved into a downtrend right here. Okay, here's your 2421 line. And then you can see yesterday we had the gap up, Okay, and then we recouped that 24.37 half line. Now here's the interesting chart. This is the 10-minute chart, and you can see here on Monday, we had this tremendous, how do you say it, spike underneath the lower band. I'm sorry, that was actually Tuesday the 27th. We had the spike underneath the lower band, okay, and we had the higher time frame in an uptrend. So that's typically a buy. And then, of course, yesterday it gapped up and just continued up, took out the mid-band, took out the 2347 level, or the 2437 level on the S&P. But, you know, it's interesting because you would have had to buy into this sell-off late in the day, okay, to capture the benefit of that gap, which, quite frankly, a lot of people don't like doing. So, you know, even if you went in, by the way, even if you went in at the open, you still caught a big chunk of the move. But the bulk of the move was made overnight. Okay, now we look at the VIX, all right? Basically, we'll continue to trade between 12.5 and the 938 handle, okay? The 938 has been really long-term support for the VIX. And at this point, 1250 has been really, you know, resistance, okay? And you can see how quickly it spiked up just above the 938 level the other day, and then, of course, proceeded to sell off. Here's a 30-minute viewpoint of the same instrument, okay? And you can see the 30 has kind of moved into somewhat of a downtrend now. 938, lower level support, 1250, upper end resistance. And here's the Qs. The Qs have been really showing, how do you say it, strong support at that 137 half line. And even the other day, it basically stalled just above it, okay? And, you know, we basically had 4 tests of that level. And interestingly enough, the other day when it failed at the upside confirming line at 142.19. Okay, and here's the 30-minute chart. You can see the 30 had moved into a downtrend a couple of weeks ago, 2 weeks ago roughly. And then if I drew this line in, we'd had the 142.19 up here, and it dropped down, found support at 137.5. And again, just like the S&P, the QQQ was underneath the lower band on the 10, all right? And look, it's continued to rally almost back to the mid-band on the 10. Okay, and then here's the GDX, all right? Resistance level 2344, that was a key price line as far as I'm concerned, because a couple of closes under that, and I expect the I do expect the GDX to drop somewhere down to 1820 area, okay? Lower level was 2188. It found support there, had a bit of a bounce back rally, and now it's selling back off. So we break under 2188. Okay, next level down is 2149, and I do believe it will continue lower. Here's the daily chart. Now, again, very interesting. Over here, you can see where the daily, this is back in the beginning of the year, moved into a downtrend. Okay, the EMAs are spread apart, slight movement to the downside. All right, but, you know, I think what's critical here is once it broke underneath the band, the mid-band has acted as resistance on every rally. Now, here's the TLT on the daily. And again, this is quite fascinating because, again, in a downtrend, we had an upside objective up to 128.13. It hit it, and it's been pulling back off that level. Next level down is 125, which is, by the way, approximately, pull this up, the mid-band. Mid-band here is 125.62. So unlike the GDX, the TLT actually got above the mid-band on the daily. So now that it's broken above it, I would expect that to offer support. So we'll see if, in fact, that does act as support. Now, here's the short-term view, 128.13 on the upper end. There's your 121.88. All right. We have a support line, upside confirming line at 125.78. And again, I do believe that 125 gets tested. And then here's energy. Okay, the energy, the XLE, you can see here from this chart, has moved into a downtrend. 64.06 is the support line, and you can see it's been trying to hold support there. My feeling is for the XLE to make any substantial rally, it would have to close above 65.63. But I wanted to show this chart. This is the USO. I don't typically show this. But what's kind of interesting about the USO is that you can see here on the daily chart that it actually was so oversold, it was actually underneath the lower band, whereas the XLE isn't even close to it. And, you know, that's where this little counter trend move has occurred from. And then we scale down to a 60-minute view, okay? Excuse me, here's the 64.06 level. You can see how it was testing it. And the upside level is 64.84, so two closes above that. And I think the XLE does test 65.63. Okay, any questions on any of the indexes before I move on? Because I want to show two post-earnings deals. Okay, no question. Let's move on because I'm going to make this webinar very quick today. And again, remember, by the way, I do expect today's Thursday. Tomorrow, I would expect tomorrow afternoon to be very light trading. We're coming into a long weekend. We have, of course, the market closed Tuesday for the July 4th holiday, a half day on Monday. So, you know, my suspicion is a lot of the New York traders will probably be heading out around lunchtime tomorrow for a long weekend. And probably Monday will be a ghost town at the exchange. But anyway, here's BlackBerry. They reported a few days back, okay? And I thought this was kind of interesting. There was a couple of scenarios here with BlackBerry. Number one, as you can see, it had traded well above the upper band on the daily. Then they announced earnings. You can see it gap down. Here's the 10-minute chart. You can see how it closed underneath the low of the first bar, continued to drift down. Then it recuperated the lower band. And then the next day, it just screamed. Didn't quite make it to the mid-band, okay? But it ran from 950 up to almost 10 and a half. It ran almost a buck in 2 days. Actually, less than 2 days. Very interesting move. And then here's CAMP, California Amplifier. They reported yesterday. And again, I thought this was kind of interesting because a couple of phenomenons going on here. Number one, on the daily, the money flow has been positive. You can see how long it's been positive. But essentially positive for the whole year. Maybe slight sell-off here. We scale down to the 60s. 60s in an uptrend. Primarily positive money flow. Then we scope down to the 10. Opened, ran down a lower band, and essentially just turned around and ripped up. Ran about $2 off that setup. So again, upper time frame, you know, to me, this setup was better than BlackBerry because the 60 had positive money flow, and so did the daily, and the 60 was in an uptrend. You know, so here's the stock. It just took off, ran $2 off that setup. Just a tremendously nice move. All right, anyway, that's what I wanted to cover today. You know, I'll open it up for questions. If you have any, shoot them through. If not, we're going to close down. I know I ran through this pretty quickly, but, you know, you have the PowerPoint, so you'll be able to look at all the numbers. Okay. All right, fine. I don't see any questions. I'm glad everybody enjoyed this. What I'll do is I'm going to close down for the day, and I want to wish everybody a really great July 4th weekend. Thank you very much.